Question 38. Prepare journal entries for the City of Pudding's governmental funds to record the following transactions. First, for fund financial statement, then for government-wide financial statement. First, so let's prepare journal entries for fund financial statement. This is for governmental funds. More specifically, there are 5 governmental funds, including general fund, special revenue funds, capital project funds, debt service funds, and permanent funds. So when we prepare journal entries, we need to specify which fund it belongs to. Okay, transaction A. A new truck for the sanitary department was ordered at a cost of 94,000. This is for general fund, and we debit encumbrance and credit encumbrance outstanding 94,000. So both are particular accounts which we have introduced in prior videos. Those are for the purchase order. Transaction B. The city print shop did 1,200 worth of work for the school system, but not yet being paid. Okay, so this is also belongs to general fund, and we debit expenditures, so that's a cost, and then credit due to internal service fund, like some payable, 1,200. And transaction C. 11 million bond was issued to build a new road. So this new road is like a long-term asset or capital project. So this belongs to capital project fund. And journal entry is to debit cash, because when fund is issued, then the government will get $11 million cash. And then credit other financing sources, bond proceeds. So this is a specific account we use for fund statements. It's called other financing sources, bond proceeds. And the dollar amount for both of them are 11 million. Transaction D. Cash of 140,000 is transferred from the general fund to provide permanent financing for a municipal swimming pool that will be viewed as the enterprise fund. So we don't need to worry about for the enterprise fund, but for the general fund, so this belongs to general fund, we debit other financing uses, which is the transfer out, debit that, and credit cash 140,000. So cash is transferred out to the enterprise fund. Then transaction E. The truck ordered in A is received at an actual cost of 96,000. Payment is not made at this time. Okay, so in this transaction, first we need to reverse this budgetary account. In other words, both are temporary accounts. So when the government actually received the truck, first we need to reverse this first journal entry we prepared for the transaction A. So we debit encumbrance outstanding and credit encumbrance 94,000. So they are closed, and then record the true cost of truck. So we debit expenditures, truck, and then credit accounts payable. So even though truck is like an asset, but this is for fund statement, we do not record any long-term asset. We debit expenditures or record its cost, and then credit accounts payable 96,000, which is the true actual cost of this truck. Transaction F. Cash of 32,000 is transferred from the general fund to the capital project fund. So both general fund and the capital project fund are governmental funds. So we need to prepare 2 journal entries. That's transaction F. Okay, one is for the general fund. So we transfer general cash out from the general fund. So we debit other financing uses, transfer out, and credit cash 32,000. That's transfer out, and then transfer the cash into capital project fund. Journal entry is to debit cash and credit other financing sources. Now it transfers in. So when they issue bonds, then that's other financial sources, bond proceeds. Okay, next transaction. This G. A state grant of 30,000 is received that must be spent to promote recycling. Then journal entry in this transaction is to debit. So this is for the special revenue fund. Debit cash, because cash is received, but because they have to be used for this specific purpose, and that's the unearned grant revenue, like liability, 30,000. Then the last transaction, the first 5,000 of the state grant received in G is properly expended. Okay, so they found a way to use those funds. And then the journal entry is to recognize those revenue. So we debit. So this is also for special revenue fund. We debit unearned grant revenue and credit grant revenue. So this is when revenue is actually recognized. And the next is to spend those grant is to debit expenditures and credit cash 5,000.